Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. I'm Michael Fox, and this is the Prospector News. Joining me, I have Peter Krauth of the Silver Stock Investor. Welcome, Peter.
Michael, thanks for having me. It's a pleasure to be here.
Yes, it is. It was good to see you in Vancouver at the two events that we were at. It was nice to catch up.
Yeah, you bet. I mean, we've chatted a few times electronically before, but first time in person, and it was a pleasure for me as well.
Wonderful. Now, for the listeners that don't know who you are, how about a bio and how you got into the silver business?
Absolutely. So I've actually been researching and writing on investments for over 15 years, closer to 20, in fact. And in around 2007, started working with a group out of the US, better known as Agora. A large sort of umbrella group that is, I think, one of the world's largest financial publishers. And they actually put me to work on a project, what they called a super cycle, commodity super cycle book. And I was fortunate to be teamed up with Rick Rule actually on that project. So that was a great start for me. And within about a year and a half or two, a new I guess group started up under Agora called Money Map, and they called me over to start writing a resource newsletter for them. And so I was with Money Map until 2019. They went through a restructuring. I actually started doing some freelance work for mining companies, and then was itching to start up a newsletter of my own. And connected with Gwen Preston of Resource Maven. This would be back in sort of mid 2020. And we chatted back and forth a few times. We saw that we had a lot in common and pretty much hit it off, and brainstormed a little bit about, starting a newsletter. And funny enough, we both very much honed in on silver, and realized, looking quickly and knowing the market, that silver was a highly underserved subsector of the commodities market, and was certainly primed to perform really well in this cycle. So within a couple of months, actually managed to hit the ground running. That was January of 2021 with the Silver Stock Investor newsletter. And it's been very well received. We're really happy with how that has progressed. And that has brought us to nearly a year and a half already of writing that newsletter.
So after a year and a half of writing newsletters, you're now an accomplished author, and you have your own book, The Great Silver Bull: Crush Inflation and Profit as the Dollar Dies. Literally just out. I think the ink was still wet on the copy that you gave me in Vancouver. Thank you very much. So why this book? Why now?
So actually, funny enough, that actually that project got started back in March. So just really 2 months after launching the newsletter, I guess I wasn't busy enough. And so I thought, well, why not add on another project? And it was actually a good friend who planted that seed, someone I worked with my prior newsletter career. And so he said, Peter, you really have a lot of knowledge and experience working with silver. Why not write about silver? And put all your knowledge and understanding of the market and the potential and the opportunity in one place. So that's what I did. I slowly started writing, pulling together some previous things I had done in articles and so on. And the entire, I guess, outline kind of fell into place pretty easily. Now, I don't want anyone to think that the project was easy. The outline was easy, getting it all written, and a lot of the sort of practical and administrative side of things that people don't realize behind writing a book were quite challenging. I was very fortunate to have a lot of great help in that respect. But yeah, so started in March, took a little over a year to get done and to get published and out there. And as far as why now, well, the opportunity is stronger now than ever in silver. There are a few particular things, I guess, about silver that are worth mentioning. One is that it's certainly a much smaller market than gold. It's considered gold's poorer cousin, but that's not a negative comment on silver. As far as I'm concerned, in fact, that actually adds to its allure, as far as I'm concerned, is for investors, because it is more volatile, but that allows for much more potential upside. And something key to remember is that silver actually outperforms gold in bull markets. It has done that multiple times over the last sort of 50 years. And I don't see any reason why it won't do that again. So, I mean, that's the overview. And if we can maybe jump into some, I guess, maybe, more specific things that you may want to know about it from here.
Yeah, definitely. One of the first things that I grabbed was there was a very long section at the start of the book about the history of silver and the silver markets. What can we learn about the history of silver that applies to the world today?
So I would say that one of the most interesting and probably impactful things about silver through history is that it was the first true international currency, and it was part of world currencies up until only 50 or 60 years ago, until the mid 60s, when it was removed from our coinage. That's true both in Canada and in the US. And as the first true international currency, so this goes back to the Greeks, I believe it was about 800 BC or so. They fashioned the first silver coins that, because they were so, so great in commerce and travel, they were great mariners. And so they used these coins, and they eventually were widely accepted in, nations all around the Middle East and Europe eventually. And it's not by accident. Silver really is, in one of my chapters, I say that silver is ideal money. And very much like gold, that's because it's scarce, it's consistent, it's fungible, it's you can't destroy it. It's easy to combine in terms of, if you have smaller pieces of coinage in terms of value, you can combine them for larger purchases. You can use individual items for smaller purchases, and it's discreet, it's private, and it doesn't depend on anyone for its value. It's not like a stock or a bond. You don't need to have anyone honor it. It has its own sort of intrinsic value. So really, silver is ideal money, and the fact that it was money for, or in our money for over 2,000 years, it says a lot about what its history is, and the fact that for only about maybe 50 or 60 years it was not in our money. We should really ask ourselves why that is, and that kind of led to, I guess, the second part of the book. And if you'd like, we can maybe chat a little bit about that.
Yeah, let's do that. Why isn't silver part of our money any longer?
Sure. So that's the same. The same goes for gold. Silver is not part of our money because having gold and or silver to back money actually puts restrictions on central planners and central bankers. If a certain percentage of the outstanding money in circulation in the economy has to have gold or silver to back it, that means that they can't print at will. They can't increase the money supply as they please. And so that ties their hands. They don't like it. And they eventually found a way to remove it from money, and which allows them to print as they please. And it helps fund their pet projects, and it helps to pay for things, popular programs. It essentially buys votes over time. And when people realize that they can vote themselves all kinds of goodies, well, they certainly cave to it. They don't ask too many questions, and it helps. It certainly helps the whole system perpetuate itself. So that's why silver has been important. That's why silver and gold are no longer part of our money, because it, as I say, allows the printing without limits. But that certainly is one of the reasons that if we look at where we are today in terms of debt, in terms of inflation, removing restrictions on the printing of money and the increase in debts. Those are two things that are essentially the main keys to the kind of problem that we're facing today. So I'll just give one example. In the US in the 1970s, the debt to GDP ratio was about 35% and actually falling during that decade. And yet today, in the US, the debt to GDP ratio is about 130%. So it's almost 4 times what it was in the 1970s. In the 1970s, inflation was rampant through that decade. But Paul Volcker, who was the chair of the central bank around 1980, was able to ultimately raise rates very high to 20%, which is unthinkable today. That actually helped to crush the inflation problem. But remember, at a debt to GDP ratio of just 35%, it's a lot easier to raise rates, at least temporarily, and have all debts face higher interest rates when your debt to GDP ratio is so low. Today, it's unthinkable. I mean, at a debt to GDP ratio, if you were to raise rates to even probably 8 or 10%, that would consume so much of the national budget. There'd be little left to spend on anything else. And so that really ties the hands of central bankers. They, despite the Fed, today saying we're going to keep raising rates to crush inflation, they know they should, but they also know that they can't. And so if you understand the situation well enough, you realize that they're only going to be able to go so far. They're going to have to choose between hurting the economy or allowing inflation to run rampant. And I think that the choice ultimately, neither is good. Nobody likes really either. But from their perspective, I think the choice is easy. They will have to back off much sooner than the market thinks. And that will allow inflation to keep running. They'll keep talking a tough talk. And that will actually very likely trigger the next acceleration phase for silver.
Yeah, I don't disagree. You said 8%. I've read lots of reports that say that the system starts to crack and crumble at about 3 to 3.5%. So they've only got to, if they're going to raise it 0.5% at a go, I think we only got maybe 2 more raises before we're in trouble.
Yeah, I agree. I mean, I was completely agree. In fact, I was saying 8 just to give some perspective of, if they were to get anywhere close to the current inflation rate, in order to essentially say, okay, we're paying rates high enough so that at least you're breaking even on a 1-year treasury. and so obviously they'll never get to that level. They'll hardly likely even get to 3%, which was the previous high in the last cycle. And so, yeah, it's going to be a really interesting next several months in terms of what happens on the monetary policy side.
Yeah, I don't disagree. It's I often tell people I have a background in finance and economics, and if I wrote a paper on what they were doing economically today, I'd fail.
Right.
The teacher would have given me a
impossible.
failing grade, showed me the door, and suggested I might find another path of education and career.
I'm guessing, Michael, you're saying that because you'd have a hard time understanding what they're doing and what they're thinking.
Well, I'd love to take credit for this quote, but I honestly can't remember who said it. But we sometimes have to wonder if things are being run by well-meaning morons or idiots who really mean it.
I like that one. I hadn't heard it.
Yeah, as I say, I'd love to take credit for that one, but and for the life of me, I can't recall who actually said that.
Yeah, very apropos.
So going forward, then we have the history, we have where we're at today. When is the Great Silver Bull going to really kick off? And is it a long term, or is it going to be a quick and accelerated up growth?
So when is it going to kick off? My best guesstimate on that is going to be when we see the Fed start to basically pull back and blink. I think that once if they get rates anywhere close to maybe 2.5 to 3, perhaps even before even that, the market's going to really, throw a fit. It's already down maybe 15-16% on the year. We're close to a bear market, and I just don't think that enough of the risk or the effect of the Fed ultimately backing off and caving in and blinking has been priced in. When it is, I think that's when we're going to see precious metals and silver, gold, both absolutely tear upwards. And I do think it's part of a longer term cycle. I think we're in a super cycle for commodities through and through. And the interesting thing about silver, and I certainly cover that to a fair extent in the book, is how it's both a monetary metal and an industrial metal. And really that makes it completely unique. You can't say that for gold. You can't really say that for any other metal. About half of silver is used in industry, and approximately the other half is used either for decorative purposes, things like jewelry or homeware. Otherwise, the rest is investment. We're talking about things like physical investment in silver, buying coins and bars, or silver ETFs, which is a huge part of demand. And with ETFs today holding over about 1 billion ounces, that's actually slightly more than an entire year's supply of silver, including both mine supply and recycling. So investment demand is very important. I think that it's actually key to higher silver prices. Let's talk a little bit, back up a little bit and talk about sort of the industrial side. So about half of silver goes into industrial applications. The biggest ones are things like electronics and solar panels. Solar panels alone account for, I think it's 11% of silver demand, and that's rising very quickly. In fact, just the demand from solar panels over the next 8 years, as forecast by the International Energy Agency, would consume basically all of the silver that's produced or that's supplied today. So there's about a billion ounces of annual supply, And if solar, the growth of solar energy follows the path that's being forecast, in just the next 8 years, solar alone would consume an entire year's silver supply every year. So I just don't see that happening. And certainly it won't happen, or we won't even progress towards that without much higher silver prices. And as far as electrical and electronic applications, the entire green energy trend and revolution is very bullish for silver. Silver is used in EVs. It's used in 5G applications. It's used in medicine. There are new patents in medicine that are developed almost, I'm going to say, on a daily or a weekly basis that have some sort of silver application. So the way I see it is that industrial use for silver is very strong and growing rapidly. In fact, 2021 saw a growth in supply of just under 5%, but a growth in demand of over 19%. So it's nearly a 4-to-1 growth in demand versus supply. So that certainly bodes well for silver. And I think industrial demand will help keep a rising floor under silver prices. And I believe it's going to be the investment demand that's going to be that incremental edge that's going to help push silver prices dramatically higher over the next several years, and be the accelerant really that will help raise silver prices much, much higher than they are today.
So do you see, as the demand for industrial purposes increases, it's going to start to squeeze the investment demand? So do you foresee a point where the price of silver splits for an industrial user versus an investment?
Well, it's interesting you ask, because it looks like we are perhaps already there to some extent, because if someone were to buy silver in large quantities wholesale, you would assume they're getting something close to the spot price. Obviously, there's transportation and so on, but the spot price today is around $22 for an ounce of silver. If you go to buy silver as an investor and you're looking to buy even, bars, larger bars, or even coins in particular. Now, I'm not talking about collectibles, but just silver bullion coins that are produced by a national mint. You're looking at easily a premium of about 30 to 35% over the spot price. Now, of course, smaller quantities, so a 1 ounce coin or a 1 ounce wafer of silver obviously has more handling and what they call seigniorage fees. That's the mint's work and efforts to create the coin, and then distribution, and then the inventorying, the profits and distribution that the coin dealers have to incorporate in the price. So, but keep in mind, a normal premium on a 1 ounce silver coin, bullion coin, is about 12 to 15%. And we're still at about 35%. So it's more than double what it is normally. And I would argue that the investment demand has sustained itself very high, and that demand has helped push the price for investment silver considerably higher. Like I say, an ounce in US dollars today, a physical ounce in the spot market for large quantities for industrial use is, say, $22, but you're looking at closer to maybe $28 or $30 US for a bullion coin. So that's already there. It's been higher. There was your listeners may or may not be familiar with the Silver Squeeze event that took place in late January of last year, where a social media campaign called for investors to buy the SLV silver ETF in order to help us, I guess, squeeze what they saw as a large ongoing short position. In any case, it worked. It worked for a few days. It worked for a while. The silver stocks almost across the board were up 35-40% within a matter of days. And premiums went to 50-60%, in some cases 75% on bullion coins. And there's a shortage still today. Bullion dealers simply cannot keep enough silver coins and bars in stock for investors. And the interesting thing is that investors, it's small retail investors. We know that because the bullion dealers have said that it's been, they were overwhelmed with the quantity of orders, and they were all small orders. So these are not big industrial users who are looking to try and soak up a bunch of silver. It's been essentially retail investors. And so, as I say, with premiums still today around 30 to 35%, double the normal levels, investment demand is still really high.
So you suggested that as this great silver bull takes off, so will the gold market at the same time. Currently, the ratio for gold and silver is at the high end of the spectrum. So do you see that starting to moderate back to kind of a more normal average? I guess meaning that the silver price increase is going to be exponentially faster growth than the price increases in gold.
I do. The silver gold ratio, if you look back at most people call it the gold silver ratio. So if you look at that ratio going back over about, say, 50 years or so, it's averaged around 55 to 60. We're currently around 85. It usually, not necessarily, but historically, it tends to top around 80. And at that point tends to start to fall again. So when it falls, it means that the silver price typically is accelerating faster than the gold price. And that's what we see when we enter a new rally phase for precious metals. So that's exactly what I expect, that when the next rally phase kicks in, that both silver and gold will start to perform very well, but simply that silver will outperform gold and accelerate faster. So that's definitely what I'm getting from the gold silver ratio at this point.
Okay, I had one last question about the book. The foreword was done by Ross Beatty. How'd you make that happen? Because that's pretty impressive individual to be writing a foreword for your book.
Yes, I agree. I feel very, very fortunate. And so the backstory on that is that I actually had somebody, I'm going to say almost, or depending on your perspective, just as well recognized and well read in the entire commodities sector. And unfortunately, that did not pan out for a question of time availability, kind of at the last minute. And so we brainstormed. I was speaking to Gwen, the partner at Resource Maven, and we sort of said, okay, what can we do? Who could we ask? We had the deadline to meet, which was about maybe 2 weeks away from that at that point for publishing the book, for releasing it. And she said, oh, well, I know I have a good contact with the Geo, one of Ross Beatty's top geologists. So she said, I'll reach out to him and see if he's able to connect us with Ross. And Ross was amazing. He answered very quickly. I'm going to say this was a Tuesday evening. I remember very clearly. So on Eastern time, it was around maybe 6 p.m. By about 8 p.m., he'd replied and said, I'll give a kick at this can. And by the next morning, it was written. And it was word for word the way it appears in the book. Nothing was changed. I thought it was, from my perspective, it was ideal. And so that's how that came to be. And so, yeah, Ross was very generous with his time and also extremely efficient. and helped to get it done. And I'm very grateful for that.
Now, that's a wonderful story. I always say you don't get if you don't ask. So, sometimes
Agreed.
you have to reach for the stars, and surprisingly, you'll get one.
Agreed completely. Yes.
So if people want to get a hold of your book, how do they go about doing that?
So it's very easy. It's available on Amazon in Kindle or paperback. And so they just need to go to amazon.ca or amazon.com and type in The Great Silver Bull, and that book will come up. And from there, they just need to go ahead and order it. So yeah, I think that we've been getting some really good reviews. I'm really happy with the response. People seem to really like it. And I'm also happy to say that in the first, it's been about 3 weeks that it's been available, 3.5 weeks. It's been amongst the best sellers since then. And it's been, ever since, it's been the #1 new release in the trading and commodities sector on Amazon. So people seem to like it, and I'm really happy about that. Needless to say, I just basically put together what I thought anybody who was interested in silver, understanding silver's background, understanding the silver opportunity, and trying to understand how to take advantage of it. I didn't want to make it too academic. I wanted to make it a relatively easy read. And I wanted it to as well be some sort of a reference guide that people could go back to, understand things about silver, understand about mining and mining investments, again, without being too technical, and then how to approach building their own silver investment portfolio. And ultimately in the book, and this is something that I didn't want to overlook, how to ultimately sell your silver and silver stocks when the cycle peaks, which I expect will be several years from now, but at much higher levels. So yeah, I addressed all of those issues in the book, and as I say, I'm really happy the response has been fantastic so far.
Yeah, for those out there, if you have even a passing interest in silver, you need to pick up the copy of this book. It is a good read, and it's very well written towards the layperson to understand. So thank you, Peter, and good luck with book sales, and I look forward to seeing you again soon.
Thank you very much, Michael. It's been a pleasure, and I certainly look forward to our next chat.